Hello viewers and subscribers. In this video, we'll talk about major tax deductions and credits for businesses. In the last video, we talked about deductions and credits for individuals. In this follow-up video, we will discuss deductions and credits for businesses. Let's get into it. Understanding tax deductions and credits available for your business can help you save significantly on your tax bill. We'll start by looking at business deductions. Tax deductions reduce the amount of business income that is subject to tax. By lowering your income, deductions mean you pay less taxes, as your taxes will be calculated on a lower income. We'll start by taking a look at 15 popular tax deductions that businesses may take. First, operating expenses. Business owners can deduct the ordinary and necessary expenses for running their business. Ordinary expenses are those that are common and accepted in the trade or business, and necessary mean they are helpful and appropriate for the business. So if, for example, you're running a hair salon, then you can charge expenses like your hair products, salary for your employees, electricity, rent, etc. These would be your normal expenses that you can deduct for that business. But if you were to take a vacation, you could not expense that as a business expense, as that is not necessary for running your hair salon. Examples of operating expenses include rent, utilities, office supplies, and employee wages. This is the most extensive category of deductions for businesses. It includes all operating expenses incurred in running the business. Business owners must keep meticulous records of all business expenses, no matter the size. Even minor costs like office supplies can add up over a year. Second is cost of goods sold. Cost of goods sold are direct costs incurred to produce the goods a company sells. This includes raw materials, direct labor, and manufacturing costs. Accurate tracking of cost of goods sold is crucial, especially for manufacturers and retailers. It directly impacts your gross profit and can be a red flag for IRS audits if calculated incorrectly. So you have to be very careful with that. Next, depreciation. Depreciation allows businesses to deduct the cost of business assets over their useful lives. Instead of deducting the entire cost of an asset at once, businesses deduct the cost over several years. So if you bought a car and you estimate that it will last for 5 years, you will deduct the cost of the car over 5 years in equal amounts over the 5 years. That's how depreciation works. Now, the tax code does allow for accelerated depreciation on some assets. This means that the cost of these assets can be deducted all at once instead of being spread out over several years. And this helps businesses to recover the cost of these assets quicker than if they were to be depreciated over the usual time allowed by the depreciation rules. One section of the tax code that allows for accelerated depreciation is what is called Section 179. Section 179 allows businesses to deduct the full purchase price of qualifying equipment and software in the year they are placed in service, but up to a certain limit. And for 2023, the maximum deduction is 1.16 million and it phases out at 2.89 million. So anything over 2.89 million would not be deductible. Bonus depreciation is another part of the tax code that allows businesses to accelerate the depreciation on their assets. Under bonus depreciation, businesses can take an additional 80% deduction for the cost of qualified property acquired and placed in service during the tax year. Bonus depreciation can be taken for new and used property. Depreciation can be a powerful tool for tax planning. The ability to deduct large purchases immediately through Section 179 or bonus depreciation can significantly reduce taxable income in a given year. As part of your tax strategy, businesses can opt to purchase assets in years where depreciation would be most beneficial to them. Next up is business vehicle expenses. Businesses can deduct the cost of purchasing and operating a vehicle, and the business can deduct either actual expenses or use a mileage rate allowed by the IRS. If the vehicle is used for personal use, the expenses must be prorated and only the business portion can be deducted. The standard mileage rate is $0.655 per mile for 2023. So that's 66 cents. Business owners should figure out which method will yield the larger deduction and use that one. The standard mileage rate is simpler, but the actual expense method might yield a larger deduction for newer or more expensive vehicles. Bear in mind though that the business must use the standard mileage rate the first year the vehicle is used for business in order to use it in subsequent years. Otherwise, the actual expense method must be used. It's important to remember that, so if you think you'll be driving a lot for business in the future, then you need to use the standard mileage rate in the first year the vehicle is purchased and put in use. Otherwise, you will have to use the actual method going forward. Very important to remember that. Next up is home office expense. Business owners are allowed to deduct expenses for the portion of their home used exclusively for business. Expenses are allocated to the business on a pro rata basis, usually using square footage used for the business compared to the total square foot of the home. Expenses such as utilities, insurance, mortgage interest, and property taxes are deductible. A simplified method of $5 per square foot up to 300 square feet can be used instead of prorating actual expenses. For business home use above 300 square feet, actual expenses must be used. This deduction has become more relevant with the rise of remote work. The simplified method is easier, but may result in a smaller deduction than the regular method. Next up is employee benefits. Benefits provided to employees are deductible. These include things like health insurance premiums, retirement plan contributions, education assistance programs, and life insurance coverage. 7. Travel expenses. Ordinary and necessary business travel is deductible at a rate of 50% for 2023. Travel expenses include transportation, lodging, and meals. Business owners should keep detailed records, including the business purpose of each trip. Next, advertising and marketing. Costs for promoting a business are deductible. This category is broad and can include digital marketing, which is increasingly important. Be cautious with items that might be considered entertainment, as these are not usually deductible. Next up is insurance premiums. Business insurance expenses are deductible. These include business liability insurance, commercial property insurance, and business interruption insurance. 10. Professional fees. Legal, accounting, and consulting fees are deductible. Rent expense is the next one. Office space and equipment rentals are fully deductible. Interest on business loans. Mortgage interest on business property and interest on business credit cards and loans are deductible. Larger businesses have restrictions on deductible interest imposed by recent tax law changes. Next, taxes. Certain business-related taxes are deductible, and these include property taxes on business assets, payroll taxes, and state and local taxes related to a business. Federal income taxes are not deductible for businesses. 14. Education and training. Costs for improving skills related to your business are deductible. And 15, and last, bank fees. Charges for maintaining business accounts and credit cards are deductible. And this brings us to the end of the tax deduction we look at in this video. And this list is by no means exhaustive, but this is a list of some of the more popular business tax deductions that are available. We'll now take a look at business tax credits. Businesses can avail themselves of certain tax credits to reduce their tax bills. And business tax credits come in many different shapes and sizes. There's probably a tax credit for every business. The rules for qualifying can be stringent for some of these credits, so businesses must make sure they're following the rules when claiming these credits. We'll now look at 11 business tax credits. 1. Research and development or R&D tax credit. Up to 20% of qualified research expenses can be claimed as a tax credit. Unused amounts can be carried forward for up to 20 years. Many businesses do not realize that this credit is available. Even if a business is not in a traditional R&D field, it might still qualify if it is developing new products or processes. 2 is the Work Opportunity Tax Credit. This credit is allowed for hiring individuals from certain target groups who face significant barriers to employment, such as veterans, long-term unemployed, and individuals receiving government assistance. The credit is generally 40% of first-year wages up to $6,000, but in some cases may be as high as $9,600 per employee. This credit can provide significant savings while also supporting workforce diversity. However, it requires certification from state workforce agencies. The third one is Small Business Healthcare Tax Credit. This credit is available for small employers who provide health insurance coverage to employees. To qualify, businesses must have fewer than 25 full-time equivalent employees, pay average wages of less than $56,000 per year, and cover at least 50% of the employee's health insurance premiums. Employers can deduct up to 50% of premiums paid, 35% for tax-exempt employers. This credit can make offering health insurance more affordable for small businesses, but it has strict eligibility requirements. Disabled Access Credit. This credit is for small businesses that incur expenses to provide access to persons with disabilities. Businesses can deduct 50% of eligible access expenditures that exceed $250 but don't exceed $10,250 for a maximum credit of $5,000. Next up is Employer-Provided Childcare Facilities and Services Credit. Businesses can claim a credit of 25% of qualified childcare facility expenditures plus 10% of resource and referral expenditures. The credit is limited to $150,000 per tax year. This credit can be a significant benefit for businesses looking to support working parents, but the administrative requirements are complex. Next, New Markets Tax Credit. Businesses can claim a 39% credit over 7 years for investments in community development entities. This credit is designed to stimulate economic growth in low-income communities. It is complex but can provide substantial benefit for qualifying investments. 7. Renewable Energy Investment Tax Credit. Businesses can claim a credit for solar, wind, and other renewable energy investments. The percentage that can be claimed varies by technology and project start date. This credit aligns financial incentives with environmental goals. The percentage varies, so be careful. Careful planning is essential to maximize the benefit. Next up, Energy Efficient Commercial Buildings Deduction, or Section 179D. Businesses can claim a tax credit of up to $1.88 per square foot for energy efficient improvements, and this credit can provide significant benefits for new construction or major renovations, but requires certification by a licensed engineer or contractor. 9. Employee Retention Credit. This credit can be claimed by businesses that kept employees on payroll during COVID-19. While the credit has expired, it can still be claimed retroactively. It provided substantial benefit for many businesses during the pandemic. If you're planning to claim this credit, be very careful as there has been some abuse and the IRS is on the lookout for fraudulent or incorrect claims being made. 10. Family and Medical Leave Credit. This credit can be claimed by employers who provide paid family and medical leave to employees. Businesses can claim up to 25% of wages paid during leave. The 11th and final credit we look at is the Alternative Fuel Vehicle Refueling Property Credit. Quite a mouthful there. This credit is available for installation of electric vehicle charging stations or other alternative fuel equipment. Businesses can claim 30% of costs up to $100,000 per location for installation of charging stations. Those are the 11 credits we look at. Now let's look at some important considerations as it relates to business tax deductions and tax credits. First, let's talk about eligibility. Each deduction and credit has specific eligibility requirements. You must ensure that your business qualifies before claiming these deductions and credits, or you could find yourself in serious problems with the IRS and might have to repay penalties and interest for incorrectly claiming deductions and credits. Next, documentation. Maintain thorough records to support all deductions and credits claimed. 3. Tax law changes. Stay informed about potential changes to tax law that may affect deductions and credits. 4. State-specific benefits. Check your state's tax rules for additional deductions and credits. Timing is another consideration to think about. Some deductions and credits may be more beneficial if timed strategically across tax years. And this is where a tax advisor can come in handy to help you with tax planning to make sure you're maximizing your deductions and credits at the most appropriate times. Next up, alternative minimum tax. Be aware of how the AMT might affect your ability to benefit from certain deductions and credits. Talk with your tax professional to understand this better. And we'll talk about the AMT in a future video, as it is a complex issue and we'll get a little more into that in future videos. Carry forwards and carrybacks. Some unused credits and deductions can be carried forward to future tax years or back to previous years. Next, complexity. Many business tax deductions and credits have complex rules. Consider consulting with a tax professional to ensure compliance and to maximize your benefits. Navigating business tax deductions and credits can be complex, but the potential savings make it worthwhile. Businesses should keep detailed records and work with a tax professional to ensure they're maximizing the benefits while remaining compliant with tax laws. Tax laws change frequently, so businesses should stay informed about current regulations and how they apply to specific business situations. Tax strategy should be tailored to unique business circumstances, and regular consultation with a tax professional can help business owners develop a comprehensive tax strategy that goes beyond just claiming available deductions and credits. And that's it for today's video. As always, remember to like, share, and subscribe. Until next time.